Welcome to the Dealreporter podcast. Hello, I'm Julie-Anna Needham. This is Dealreporter's first podcast of 2014. We're going to be looking at what the year ahead holds in terms of M&A, ECM, shareholder activism and other corporate activity. I'm joined by three members of the Dealreporter team, Ed Vinales and John West in London, and by Antenen, who's in New York. Now, Ed, we're going to start with you looking at general corporate activity. In terms of public M&A in Europe in particular, things were subdued in 2013. One of the sectors that I cover, mining, there were hardly any deals in that sector during the year. What key trends will drive corporate activity in 2014?
Well, things to look for are corporates with large cash reserves and shareholders who are pressurising them to deploy that cash in an M&A environment. Opportunistic acquisitions will continue where we see companies mismanaged that endure profit warnings. They'll attract private equity, which has lots of cash, and also the increased availability of non-bank lending will drive deals, and also the anticipated increase in interest rates as a result of Fed tapering could impact the probability of mega debt-funded deals, i.e. do your deal more quickly.
And looking forward, what are the key sectors to follow in the next year?
The key sectors will be telecommunications, pharma, healthcare, FIG's another area to watch as a result of regulatory drivers, and energy, most specifically natural resources.
And can you highlight any situations to follow and companies to target for pre-event or special situation activity?
Yeah, a situation that's interesting is the current live deal that could move into a sort of pre-event situation. That's Jazz Pharma's bid for Gentium. If that deal concludes, Jazz could be a target for Shire. And you've got to remember that Shire itself has been a long-rumoured target. So what does that mean? There's a chain of events there to follow, and it involves large liquid companies.
And another driver of corporate activity is shareholder activism, which brings us on to you, Jay. What are we expecting to see in 2014?
Yeah, I think it'll be another busy year in North America after lots of activity last year. One emerging theme we are seeing is settlements between companies and activists that are targeting them. The coming weeks are going to be a key time for this. U.S. companies typically hold their shareholder meetings in the spring, and the board nomination windows are opening up right now for activists to go nominate their own directors. And
can you run through some recent examples?
Yeah, one interesting settlement, or I guess near settlement, that happened late last year was Carl Icahn protege Keith Meister jumped into the Florida insurance company Fidelity National Financial, basically urged the company to spin or sell off its non-core companies. A source familiar with the matter told me that Fidelity loved the idea after Meister presented it to them and fully presents to implement it in the future. The question here is whether there'll actually be that much value to unlock because the non-core businesses aren't that valuable. Another recent example is Detroit technology company CompuRare, which has settled with Elliott of Silesia fame just a few days before the nomination window closed for its board.
Oh, Jay, just mentioning Elliott there, they've also just reached agreement with in the Silesia-McKesson deal. People are talking about activism in Europe in 2014. I was just wondering if you could supply a couple of indicators that we should look out for when trying to ID corporates that might potentially become subject to activism.
Yeah, so beyond, I guess, the traditional cases of announced transactions and people pushing for higher prices, there also might be some themes similar to what we've seen in the U.S. the past few years where activists go after undervalued companies or ones with poor governance. One thing to watch out for is if there's a controlling stakeholder in the company, it makes it much more challenging for activists to win.
And finally, Jay, what are the trends that we'll be seeing?
Yeah, an interesting development we've been tracking in the U.S. has been investors targeting larger and larger companies. Typically, they went after small firms where they could get sizable stake and really have an impact on what's going on. Now, when they're going after a mega firm, they have to do it more through moral persuasion and the media to try to convince shareholders to support them. Two examples last year were Apple and Microsoft. An emerging candidate is PepsiCo. Shareholders there have been very frustrated with the performance of its namesake soda business, and Nelson Peltz made some noise about Pepsi last year. So he has an opportunity to nominate some board members this month. Remains to be seen if he'll actually do that, and if he does, he has any chance of actually winning.
OK. And John, turning to you, ECM was very strong in the final quarter of 2013 with IPOs from Royal Mail and Numericable. Will this continue?
It certainly looks like it. Many funds, particularly US funds, are still underweight Europe, not least Southern Europe. So the pipeline is very strong in countries like Italy, where you've got the usual luxury names and even big sort of industrials like Fincantieri, the shipbuilder. It's interesting you mentioned Numericable. Altis, the Luxembourg telco and cable investment vehicle, announced that it's going to list in Amsterdam. It's lined up a 40% stake in Numericable, and it's looking to list in the first half of February. We've reported it could have a valuation of €5 billion is plausible, but depends on the holding company discount.
And away from IPOs, what does the pipeline look like for other issuance types, such as rights issues?
Well, Ed's already mentioned tapering, and I think that plays a role here. As debt financing becomes less attractive, we may see more M&A backed by rights issues. In the near term, however, you're just looking at companies in a tight spot. Inmobiliaria Colonial, the Spanish real estate company's lined up a €1 billion rights issue. Montepaschi, the Italian bank, should get its €3 billion cash call through. And the UK insurer RSA, one top 10 shareholder, has told Dealreporter that maybe a rights issue could be the solution for them.
And finally, there were major equity-linked issues in 2013. Does that continue to be an attractive asset class for investors?
It would seem so. We've already had an issue from Econocom, €150 million CB that came with worse terms for investors. And throughout the year, we're going to see, I think, plenty of contingent convertible issuance from banks that are looking to shore up their additional Tier 1 capital. Crédit Agricole is already on the road.
OK, and finally, each of you, I want you to name a company to watch in 2014 and briefly explain why. Ed?
I was going to say Explorer Rockhopper, but based on Jay's activism tracker criteria, I'm going to say Debenhams.
OK, Jay?
Microsoft, the CEO search is about to wrap up, and there's been lots of talk of a breakup.
And John?
Lloyds Banking, the UK government's going to do a massive share sale.
Right, thanks to John, Jay and Ed, and thank you for listening.